Hey there folks, welcome to our deep dive into the fascinating world of the stock market. Jim Cramer here, ready to break down this whole stock market thing for you. Whether you're a newbie or a seasoned investor, there's always something new to learn. Now, what is it? Imagine a giant online marketplace kind of like your Amazon or Flipkart, but instead of buying that fancy new phone, you're buying tiny pieces of ownership in big companies. These companies could be anything from tech giants to small startups. These pieces are called stocks or shares. Each share represents a small part of the company, and owning shares means you own a piece of that company. You become a part owner, a shareholder. This means you have a stake in the company's success and can even vote on certain company decisions. Now, this marketplace, the stock market, is where these shares are bought and sold every single day. It's a bustling hub of activity where fortunes can be made or lost. It's like a giant auction where prices go up and down based on, well, how badly people want to buy or sell those shares. The more demand there is for a stock, the higher its price goes. Think of it like bidding on that rare collectible online, except here, you're bidding on a piece of a company's future. The stock market is a place of endless opportunities and risks, and understanding it is the first step to becoming a savvy investor. So, how do these companies even get on the stock market in the first place? It's a fascinating process that involves a lot of preparation and strategic planning. It's like a grand debut, a coming out party called an initial public offering, or IPO for short. This is the moment when a private company offers its shares to the public for the first time. Imagine a talented baker, right? She's been perfecting her recipes and honing her skills for years, creating mouth-watering cakes that everyone loves. She's been making the best cakes in town from her home kitchen, and everyone's raving about them. Her reputation is growing, and so is the demand for her cakes. Now, she wants to open a big bakery, expand her business. She dreams of having a storefront where more people can enjoy her creations. To do that, she needs money, capital. This is where the challenge comes in. She needs significant funds to rent a space, buy equipment, and hire staff. So she decides to go public. By offering shares of her bakery to the public, she can raise the money she needs. She sells a portion of her bakery in the form of shares on the stock market. This means that anyone who believes in her vision and her delicious cakes can invest in her business. People who believe in her bakery and her delicious cakes buy these shares, giving her the money she needs to expand. With this new capital, she can turn her dream into reality, opening a bakery that serves even more happy customers. Alright, let's talk about the price tag on these shares. How is it decided? Well, it all boils down to two simple words: supply and demand. Remember our baker? If her IPO creates a buzz and everyone's scrambling to get a piece of her bakery, the demand for her shares shoots up. High demand, limited supply, the price of her shares skyrockets. But if people are hesitant, not sure if her cakes are all that great, the demand remains low. Low demand, plenty of shares? The price drops. It's all about how much people are willing to pay for a piece of the action. Section 4, the big leagues, NYSE, NASDAQ, and their role. Now, where does all this buying and selling actually happen? Enter the stock exchanges, the big leagues. Think of them like the cricket stadiums of the financial world. You've got your legendary grounds like the New York Stock Exchange, the NYSE, the granddaddy of them all, where blue-chip companies, the big boys, trade. Then you've got the NASDAQ, the tech-savvy cousin, home to giants like Apple and Google. These exchanges provide the platform, the rules, and the technology for this whole share trading extravaganza. They're the referees, the commentators, and the stadium owners all rolled into one. Section 5. Dip your toes in the market tips for beginners. So, you want to be a part of this stock market action, huh? It's an exciting world, full of potential and opportunities. But before you get too carried away, there are some crucial things you need to know. Well, hold your horses, rookie. The stock market can be as risky as it is rewarding. It's important to approach it with a clear mind and a solid plan. Before you jump in head first, remember this. The stock market isn't a get-rich-quick scheme. There will be ups and downs, and you need to be prepared for both. It's like a marathon, not a sprint. Patience and persistence are key. You need to be in it for the long haul to truly see the benefits. First things first, do your homework. Educate yourself about the market, understand the different types of investments, and stay updated with the latest financial news. Research companies, understand their businesses, and don't put all your eggs in one basket. Diversify. This means spreading your investments across various sectors to minimize risk. Spread your investments across different companies and sectors. This way, if one sector takes a hit, your entire portfolio won't suffer as much. And most importantly, if you're unsure, don't be afraid to ask for help. The stock market can be complex, and there's no shame in seeking guidance. Consult a financial advisor, someone who knows the ins and outs of this game. They can provide valuable insights and help you make informed decisions. Remember, knowledge is power, especially in the stock market. The more you know, the better equipped you'll be to navigate its complexities and seize opportunities.